Artificial intelligence is not just a buzzword anymore. It is the engine powering the next wave of technological disruption. From marketing to cybersecurity to automation, AI is weaving itself into the very core of how businesses operate. And today we are diving into the 3 best AI stocks to buy right now, companies with solid fundamentals, innovative technology, and strong backing from Wall Street that makes them stand out in this crowded field. These are not random names thrown around for hype. These are businesses with real products, growing revenues, and bright futures in an industry that is only getting bigger. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. The first on our list is Zeta Global Holdings Corp., trading on the New York Stock Exchange under the ticker Zeta. Zeta is a marketing technology company headquartered in New York that is reinventing how enterprises acquire and engage customers. The company's flagship offering, the Zeta Marketing Platform, harnesses vast identity and behavioral datasets combined with artificial intelligence to enable predictive, omni-channel marketing campaigns. In simpler terms, it helps brands understand what their customers want before they even know it themselves and delivers that engagement across email, mobile, social, and web in a way that maximizes efficiency. Financially, Zeta is delivering results that back up the hype. In the second quarter of 2025, Zeta posted revenue of $308 million, a massive 35% increase year over year, which beat the midpoint of its guidance by $11 million. The company generated $42 million in net cash from operating activities, also a 35% increase year over year, and free cash flow surged to $34 million, representing a 69% year-over-year jump. Zeta also demonstrated strong discipline by ending the quarter with 0 net dilution compared to the first quarter, which is rare for a fast-growing tech firm. On top of that, Zeta has been actively returning capital to shareholders, using $85 million of its $100 million share repurchase program authorized in late 2024. Even more impressively, its board approved an additional $200 million repurchase program over the next 2 years, signaling confidence in the company's long-term value. Management also raised full-year guidance for revenue, adjusted EBITDA, and free cash flow by more than its second quarter beat, a signal of accelerating momentum. Currently, Zeta stock trades around $19.70, but analysts are bullish. According to 11 Wall Street analysts, the average 12-month price target is $27.30, with a high forecast of $44 and a low of $20. That implies an average upside of nearly 40% and more than 120% if it reaches the high end, making Zeta a stock to watch closely. The second stock on our list is UiPath Incorporated, trading under the ticker PATH. UiPath is one of the leaders in robotic process automation, or RPA, and is now evolving into a more advanced AI-driven automation company. Headquartered in New York, UiPath helps enterprises automate routine and complex workflows, saving time, reducing errors, and freeing up human employees to focus on higher-value tasks. The company's latest innovation is its generative extractions capability, announced on August 1st, 2025, for its intelligent document processing platform. This is a big leap forward in automation because it allows organizations to process unstructured and highly complex documents with the help of generative AI. Financially, UiPath is showing steady growth and strong fundamentals. In its most recent quarter, UiPath posted $424 million in revenue, up 5% year over year, and grew its annualized recurring revenue to $1.666 billion, a 14% increase year over year. It added $60 million in net new ARR, showing growth from both existing customers and new ones. Importantly, its dollar-based net retention rate was 110%, meaning existing clients are spending more each year. Margins remain strong, with GAAP gross margin at 85% and non-GAAP gross margin at 87%. Operating income was $34 million on a GAAP basis and $134 million on a non-GAAP basis. Cash flow was also robust, with $146 million in operating cash flow and $145 million in free cash flow. On top of that, UiPath ended the quarter with $1.7 billion in cash and marketable securities, giving a strong balance sheet to invest in further growth. The stock is currently trading around $11.03, but analysts are optimistic. Based on 19 Wall Street analysts, the average 12-month price target is $14.04, with a high of $17 and a low of $12, representing an upside of about 27% from current levels and nearly 55% to the high forecast. Looking forward, UiPath's future potential lies in its ability to expand automation into increasingly complex enterprise workflows, leveraging AI to reduce costs and increase efficiency for global organizations. Last on our list is SentinelOne Inc., trading under the ticker S. SentinelOne is a California-based cybersecurity company focused on autonomous endpoint protection, cloud security, and identity threat detection through its AI-powered Singularity platform. In today's digital landscape, cybersecurity is one of the most critical challenges enterprises face, and SentinelOne is using artificial intelligence to solve it at scale. On August 6, 2025, SentinelOne announced an expanded partnership with Mimecast to advance human-centric cybersecurity. This collaboration connects SentinelOne's Singularity platform with Mimecast's human risk management solution, allowing enterprises to correlate endpoint telemetry with behavioral insights and email-based threat intelligence. The integration enables real-time detection, automated risk scoring, and targeted user training to prevent breaches before they happen. Financially, SentinelOne has been delivering strong growth. In its most recent quarter, total revenue increased 33% year-over-year to $198.9 million, and annualized recurring revenue grew 32% to $806 million. The number of customers generating more than $100,000 in ARR grew 24% to 1,233, showing adoption among large enterprises. Profitability is also improving rapidly. GAAP gross margin expanded to 75% from 70%, while non-GAAP gross margin rose to 80% from 77%. The company significantly narrowed its operating losses, with GAAP operating margin improving from negative 67% to negative 40%, and non-GAAP operating margin improving from negative 22% to just negative 3%. Operating cash flow margin turned positive at 1% compared to negative 8% a year earlier, while free cash flow margin improved to negative 3% from negative 10%. With $1.1 billion in cash, equivalents, and investments, SentinelOne has the financial strength to keep scaling aggressively. The stock currently trades around $16.58, and Wall Street analysts are bullish. Based on 28 analyst ratings, the average price target is $22.96, with a high forecast of $30 and a low of $17, implying a 35% average upside and nearly 80% upside to the high target. The future potential here is enormous as cybersecurity spending continues to rise globally, and enterprises demand AI-powered solutions that can keep pace with increasingly sophisticated threats. SentinelOne's focus on autonomous, adaptive, and user-aware protection makes it a leader in this space. Well, that concludes our list of the 3 best AI stocks to buy right now. These companies, Zeta Global, UiPath, and SentinelOne, are not random picks. They're backed by strong fundamentals, exciting AI-driven innovation, and Wall Street support. Each is addressing massive global markets with products that are already seeing real adoption. As AI continues to disrupt every industry, these stocks have the potential to deliver explosive returns for investors who position themselves early. If you want to ride the AI wave and maximize your chance at big profits, these are names to watch closely.